Even with these economic challenges that we've outlined, we still have an overweight to global equities. Global equities should be supported by the fact that the expansion is going to continue. Monetary policy, even though we're reducing some of the emergency measures, is still accommodative. So we still think there's room to run in the global equity market. But because we have seen several areas of the equity market making multiple record highs this year and valuations stretched across certain areas, selectivity and patience is very important in this environment. One of the areas that we would focus on in the global equity market is the developed international equities. If you look at this chart, because the developed international equities have lagged behind the US equities, you've seen that valuations are much more attractive. The international markets should benefit from the resumption of global trade, from the supply chain getting cleared up. They tend to be much more cyclical oriented, bigger exporters. So these are the types of countries that we would focus on. Within the US, we still believe in that value, more cyclically oriented sectors over those very expensive tech growth sectors. The reason behind that is we don't think that the rise in interest rates is behind us. We think that interest rates will continue to rise. And when you're talking about rising interest rates and even higher inflation, that's going to threaten some of those companies that are trading with stretched valuations. That's going to be your tech, your growth type of sectors. Instead, look at those that should benefit from the ongoing economic expansion. That's value, that's small and mid-cap sectors, that's financials, that's energy and industrials. Those are the areas that we would focus on in the US market. Emerging markets have some of the best economic and earnings growth trajectories. When we evaluate this area, some of the things we have to look at is inflation, monetary policy, regulatory concerns, and these are all things that we think could create some short-term volatility in the emerging markets. So we're going to be patient and disciplined and looking for good opportunities to invest.